Epack series, Time with a Fund Manager. Joining me today is Mr. Nii Ampa-Sowa, who is the Chief Investment Officer at Databank, as well as the Fund Manager for Databank Epack Investment Fund, Ghana's first, largest, and best performing fund over the long term. He's here today to discuss and recap what happened in 2016, both with Epack and the equity markets, and then give us an overview of what to expect for 2017. So let's get started. Nii, welcome.
Thank you, Julie.
So Nii, let's start off by talking about the equity markets in Ghana as well as other African countries in 2016. How did they perform?
Generally, they did not do too well. Ghana's market was down 15% by the end of 2016. At a point in time, it was down, I think, maybe to 25%.
Why was that?
And a bunch of reasons, really. What happened was a number of companies did not do well in terms of their financial performance.
Okay.
And a number of investors felt that they started selling it off, basically. And as a result of that, the prices on aggregate for most of the listed companies started falling. And so Ghana's market was quite pronounced. And Nigeria's also fell by a similar magnitude. Kenya's market also fell as well, Mauritius. And
for similar reasons?
For largely, I would say for similar reasons. That on the global level, the view was that because not a lot of Africa's commodities are in demand, and Africa generally is a commodity exporting continent of sorts. So when the key exports from these countries are not doing well, their currencies are affected, and currency is a barometer for the measure of the health of an economy. So a lot of countries, that the currencies were weak and their stock markets were also weak. So the general trend, if you're looking across board for most African markets, is that you'd realize that a lot of foreign investors generally stayed away, and for those that even remained, most of them were pulling out and moving back to the US, where interest rates were perceived to be higher, and that destination from a risk assessment perspective was seen to be a lot safer compared to our markets.
So how did Epack fare in these turbulent markets? Because Epack is in Ghana as well as several other African countries. So how did Epack perform?
So by the end of the year, Epack's return for the 2016 calendar year was negative 3.44%.
Compared to the GSE?
Of negative 15%. So if you're comparing the GSE with Epack, even though yes, they were both in the negative, Epack's was considerably smaller than that for the Ghanaian stock market.
And how did you manage to outperform the Ghanaian stock market?
Well, diversification helps.
Okay.
So, and not just diversification in terms of sectors, but also from a geographical perspective. Epack is not just invested in Ghana, but in at least 8 other African markets. And having exposures to those markets lowers the risk, and in this case, also made the return a bit more competitive compared to the Ghana stock market as a whole.
Because historically, that is what has happened with the Epack. Like even 2014 and most of the years, Epack has been able to outperform because of the Pan-African mandate. Exactly.
If you're a local investor, the returns that you tend to get are usually that of price return, it's a capital gain of the change in your price, as well as a dividend yield. From an international investor's perspective, you get not just those two, but you also get a currency benefit as well. So your return is not just price and dividend dimensional, it includes a currency hedge as well. And that helps for a fund like Epack, which incidentally is also based in Ghana and reports in Ghana cities, because the currencies tend to move in a favorable manner for Ghana. And as such, we tend to benefit from that. If you compare Epack's performance to most similar funds which are based in the West, particularly in London and New York,
Right.
their performance, I would say, is arguably even better because those funds are denominated in US dollars.
Okay.
And when the currencies start moving against them in all those African countries, they will report that loss in a hard sense. So most of those funds would either have closed down or have reported losses of the magnitude of at least more than negative 10, negative 12% in US dollar terms.
So in relative terms, Epack's -3 performance, though it's not wonderful, was still much better than if you had been investing directly in stocks just on the Ghana Stock Exchange.
Exactly.
Okay, so let's move into 2017 because we're here. What is your outlook for the equity markets in 2017, and then we'll continue from there as to how it will affect Epack?
So we are a lot more positive, and I know, internally, we had a similar chat the same time last year about 2016, and the declaration then was that we expected it to be better. We are more certain about 2017 being by far better year because of a number of things. One, we've seen that interest rates for fixed income securities have been trending downwards, and last year they were actually quite elevated for a period, and investors continued moving in that direction because obviously they're seeking the better return.
Right.
For that reason, the equity market wasn't as attractive. Now, fast forward a year later, we are seeing interest rates having come down quite significantly, in some cases by as much as 10%. And as a result of that, people are looking at the equity market and saying, okay, the market has been down for at least 2 consecutive years, but the prices have been depressed for quite a while, and there may be bargain stocks to pick up at this time. So the general line of thinking for the rational investor is get into these stocks at these lower prices and ride the wave till they grow. And what we've been seeing, at least over the last 3 weeks, I would say late November, early December, we've seen a pickup in the stock market activity. Returns have actually picked up quite nicely. And currently, as we speak, the market is in positive territory.
That's very good news.
A little over 1%, I believe.
Okay. So let's hope it stays like that.
Exactly. So I would say that essentially is one reason. Another reason I would say is the macroeconomic conditions are somewhat different now compared to a year ago. Inflation was quite elevated last year. We've seen that somewhat come down, stabilizing within the 12 to 15%.
Because where were we at the beginning of 2015?
We were a lot higher, I believe 18 or 19%. And that has come down a bit, and the expectation is for inflation to come down a bit more. Now that has a dual impact for both companies and individuals. For companies, it means they would not get the cost of their raw materials would largely be a lot less than what they were some time ago, or at least prices will not be going up at the rate at which they were a year ago. And for consumers, with lower levels of inflation, it means that purchasing power, or the money that they have in their pocket, will be able to go further. It will not be declining as much. And you want that in an economy like ours, because with higher levels of disposable income, you'd expect a lot more people to consume more goods and services with that. The third reason I would say is that, generally speaking, at least in the case of Ghana, there's the political element to it. But away from party politics, the general view that Ghana has moved from one government to another, from one party to another, in a peaceful manner, which is unlike what a lot of other African countries go through, speaks well to our democratic credentials, and to that extent will also be a positive uplift on the Ghanaian market. So these essentially would be the reasons. There are others such as the IMF program as well. We are in the final year of the IMF program, and there's a general view that things are at least being contained and being managed in a good way. With the new incoming Ghanaian government,
Yes.
the expectation is that there would be a number of other positive policy measures that will be implemented to further give corporate Ghana a boost. What is being mostly talked about, for instance, is the taxes.
Okay.
And there's been a pledge to remove some taxes which were crippling some economies, some industries. And with that, I mean, that alone should give a significant lift to a number of industries.
So that's a good segue into Epack's performance then, because as you rightly said, we'll have the change of government that is taking place or has taken place, and we're in the final year of the IMF program. So how do you see that impacting Epack specifically? Is it good, bad, neutral?
I will say it's good. Epack is a Pan-African focused long-term equity fund. Our decisions, the decisions that we make as fund managers, are not short-term in nature. We take a long-term view. So,
and when you say long-term?
When I say long-term, we usually are looking at 7 to 10 years minimum.
Okay.
The fund, by the way, is more than 20 years old.
Congratulations.
Yes. So, while markets are coming down, conventional wisdom suggests that when prices are low, you get in then, and when prices are high, you try and really take some profits then. So, even though it's a challenge because most people don't operate on this conventional wisdom,
right,
we have been looking for opportunities to increase our stakes in some key equity investments and taking advantage of those diamonds which people may have undervalued in the last year or so, and to try and accumulate on that. So for instance, last year I can say we increased our investments in Safaricom. It's a telecom company based in Kenya, the largest provider there. We increased our investments in Fan Milk. We increased, that's a local ice cream and fruit drink manufacturer here in Ghana. We decided to take a position also in Guinness. It's the largest brewery and bottling company here in Ghana as well. And in Total Petroleum. These are all examples of companies who, for just a moment in time, their valuations became extremely attractive because prices fell quite sharply. And we've taken advantage of some of these ones, and as such expect that with a recovery in the market because of recovery in macroeconomic conditions, that the fund will benefit from all of this positive movement.
Okay, so then the decline that we had in 2016, you think we've hit the bottom and we'll begin to start to see positive returns?
That is...
So we can't say how positive.
Yes, we are not in a position, we don't have a crystal ball to estimate magnitude, but certainly we believe that we've passed the bottom at this stage. And if you look at, if you were to chart the trend in the Ghana, the GSE Composite Index, you'd realize that things perhaps reached a bottom in October, November of last year. And we've seen a steady uptick since then. So our expectation is that we are certainly in the early stages of recovery for the equity market. So
for those investors who are on the fence, because there are some investors who believe that it is better to exit the fund when the performance is low and then wait to actually see the recovery, then they come back in. And so we saw quite a bit of that happening last year, and now that we're kind of on the fence, like we're right about to cross over, what would you say to those who are still saying, maybe I should come out for a little and then in a few months, maybe halfway through 2017, come back in?
Well, they could miss out on a very big wave. Let me perhaps give an example. In the numbers that we've been looking at, what we realized is that the market is trading at levels, when it was at the very bottom, those price levels were last seen in mid-2011.
Really?
Yes, so that is, we are talking almost 6 years of price gains almost eroded as a result of the correction in the market. So at least, given that prices are falling by so much, it tells you one, yes, prices have fallen by so much, but it also tells you where prices could go to.
Yeah.
So why exit at this bottom and crystallize your loss only to wait for some recovery to actually translate before you get in there? If you ask me, it goes against everything.
It's a bit counterintuitive.
Exactly. It's better, in my view, that if given these trends and given where all the indicators are pointing, it's best that you actually double up if you can. If you double up now at these lower prices, so that you actually gain a lot more when the market starts recovering.
So I'm wrapping up, but so we'll look at people who are kind of nervous and still saying, should I stay, should I go? But what about people who have not yet come and they are wondering, okay, should I come now or should I wait until, maybe it's at like 4%, 5% year to date? Should I wait for that kind of return? What would you say to those about starting to invest now? Does it make sense or do you wait?
Well, as a former boss of mine used to say, the best opportune time to do stuff is actually yesterday. But it being impossible to do that, the next best thing is to take action, ideally today. The thing with equity markets is that you can't really predict the timing as to when they're going to go up and when they're going to go down. There's always an opportunity. Ideally, the best investment strategy is to be consistent. Is to be consistent in good times and bad. So if your strategy is to have, let's say, a regular monthly investment of, say, 20 Ghana cedis or 50 Ghana cedis towards an investment, say it's not even Epack, but it's any other investment, the plan or the strategy should be implemented when returns are high and when returns are low, because that constant amount of 20 cedis goes into purchasing units. And guess what? When the price for a stock, when the price for Epack is lower, the number of units you can actually get would be a lot more then than when it's higher. So you would actually get a chance to make a lot more when times are down. So in summary, I would say the best time to invest is now when prices are down.
So I'm going to take you back on one thing. At the beginning, when I introduced you, I mentioned that Epack was Ghana's best performing fund over the long term. And I just want you to give a little bit of context to that, because some people will look at the return in the recent years and then they'll compare it to other funds that may be returning higher, and then wondering how is it that Epack can still be the best performing fund over the long term. So if you could just share what the performance was and how we are able to say that, like how are you able to justify that?
Globally, when you're looking at the performance of funds, it's best not to just focus on one time period.
Yeah.
You should look over several time periods. We earlier on said that Epack is 20 years old. And the conventional time periods that you would see a lot of fund managers quote is usually the year-to-date performance, the 1 year performance, a 3 year, a 5 year, then life for since inception.
Right.
And in all these categories, you realize that Epack's return by far outstrips any of its local competitors, and I dare say even some of its global competitors.
Really?
In US dollar terms, yes. Because since inception, the dollar, the cumulative, the CAGR return for Epack,
Where CAGR means?
It's compounded average growth rate.
For annual?
Yes.
Okay.
So that, I would say, is in the neighborhood of, I believe, 30% in dollar terms.
Really?
Yes.
Okay.
About 30% in dollar terms. I can, at the end of the session, we can put something out formally on that. And since inception, if you're just looking at a simple average, a simple return, that return is over 26,000%. Cumulatively.
So 26,000% from October 1996
when
it was
started.
launched,
exactly.
to December 2016.
Exactly.
How does that compare to the GSE, which I know is the same age, roughly?
Well, not exactly the same age, but when you look at the performance of the GSE over a similar time period, the performance you're likely to get is something in the neighborhood of 5,000%.
Wow, so that's definitely impressive.
Certainly. So it pays to, and yes, in the West, you may have index funds that may try to mimic the performance of the stock market,
yes.
GSC. But in Ghana, we haven't quite reached that level. It's not possible to invest and mimic a return like the GSC.
Okay.
But the advantages of investing in, say, a fund like Epack as opposed to a GSC is that, granted, you have diversification, not just on a sector level, but on a geographical level. Because of its exposures, you also get a chance to benefit from the fund management expertise of the Databank group, which has been in the business for as long, perhaps even older than its regulators,
yes.
the Securities and Exchange Commission. Personally, we are not obliged to, but we put our money where our mouth is here at Databank. So. All the fund managers, myself included, I believe perhaps even you, Julia,
yes.
We believe in the investments enough to have a vested interest in it. So certainly we are not sitting down here and saying that, we're not just saying that Epack is a good investment. We are taking that step ahead and staying in and telling you to come and join us. There's a lot of space in the boat.
Wonderful. So as we wrap up, any final words for the shareholders that have been with you over the last 20 years, for those that will come this year, for the first year?
Yes, it's been an amazing journey. Not a lot of the Ghanaian markets are not that sophisticated, and investors may still be having a tough time accepting the cycle of equity market returns. But global studies have said it all. The equity markets are by far your best chance of making sustainable long-term superior returns than any other asset class. If you put your money in fixed income, treasury bills, or currency, or even the Ghanaian stock market,
yes.
You're much better off investing in a fund like Epack than in any of these other asset classes, or even on the markets front. So it tells you that there's something that we are doing right. I would say that if there's any time that perhaps you should consider lowering or even exiting the fund, 2017 is certainly not that time. I would say you should put it off for a year and see how the performance for 2017 is. I am extremely positive about trends in 2017. I believe it's going to be a good year for investors, and as such, I would advise them to continue keeping the faith and investing in Epack.
Well, Nii, thank you very, very much for your time. And I would like to say thank you to everyone for tuning in, and join us again soon for another session of Time with a Fund Manager. If you'd like to find out more about Epack or Databank, please visit our website at databankgroup.com or call 0302 610 610. Thank you.